Mode.
Good morning, everybody. It is 9 a.m. on the West Coast on August 30th, Thursday, and probably a good day to have a webinar. I got Dr. K on with me, and looking at this market coming off today, so I think it's a good day to be talking about what's going on, given that everything isn't exactly all hunky-dory and stocks are rocketing to the upside. You really find out what kind of trader you are when you're faced with some down days in what has been otherwise not a bad trend in the market, particularly on a stock-by-stock basis. So, but we'll get to that. But right now, what you're seeing here in the NASDAQ Composite, and I'm assuming everybody can see my screen just fine. Is that right? Let me see those yeses coming through on the IMs. Yes, okay, very good. And you can see the NASDAQ chart. So what we got going on here is, again, you have to think about where the market's been and where it is in the context of where it's been. And of course, we have this sharp move in August. August has been a very good month for the market, and that was nice for me, particularly since my birthday is in August, so I like that. And it's been a very profitable move in the market. You've seen a number of leading stocks move higher, including the big stock NASDAQ names like Apple and Amazon. You've seen new leaders emerge like Michael Kors Holdings coming out of a first stage base and running up pretty nicely from the Bible gap up level, which was around 48. I think the stock right now is trading just around 54, maybe just a little bit under right now. Let's see, do I have it up here? Take a quick look. Yeah, just under 54, so nothing really going on there. But anyways, you just see we're having a pullback. We're testing the lows of Monday, really, or I'm sorry, of last Friday, and we actually successfully tested this this level here, basically on top of this area, and bounced off. You're not seeing a lot of volume, so it is a quiet market. And like they say, never short a dull market. But I noticed NYSE short interest a couple days ago is 20.24%. Hey, Dr. K, have you ever seen a number on NYSE short interest that high? I don't really recall ever seeing anything like that.
Yeah, that's pretty exceptional.
So what do you think it means? Do you think that somebody knows something, or do you think it means that everybody's just leaning the wrong way here because they think the market's just too far up there and it can't go any higher, and therefore they're going to get short?
And that's a good number. That's not like a bad piece of data that was
Right.
exaggerated.
Right.
I mean, if it's a real number, then yeah, that speaks highly to the negative sentiment out there, which should be bullish ultimately for the markets.
Right, and it's interesting that people cite the low level of the VIX. Let me see if I can pull this up on a daily chart. The low levels of the VIX, notice that actually has been rising, so maybe that's a good thing. But the overall low levels of the VIX as a reflective of complacency. But I think you're actually starting to see bearishness creep into the market, and I can see sentiment shifting that way rather quickly because it hasn't been easy. You do have to be a good stock picker, and you definitely know how to handle your positions, or you definitely have to know how to handle your positions. So, it's not easy, but nobody has ever said the market was ever easy, and I don't ever think there was a time, other than maybe those glorious last 2.5 months of 1999 where the market was really easy, and there was this big fat easy button like they have at that office supply store that you can just whack every day in the market, and things are just going to fall into your lap. You have to kind of tough things out at times, and you have to plan your strategy and then stick to your plan. And let your stocks tell you what to do. So even with the indexes coming off today, we're mostly watching our stocks, but if we're going to look at it purely in terms of the indexes, we have to remember we've had a very sharp rally in August, and you're pulling back now. This green line that I keep on my charts, my daily charts, is a 20-day simple moving average. You see you're just pulling down to there, and this low here really haven't even got to it yet. So volume is lower right now, is it not, Dr. K? Yeah, it is running lower.
It's slightly lower, yeah. And yesterday was a light volume day.
So it's really just kind of what I see here is people are selling into the realization, and I really have to say, in respect to that Fed Chief Bernanke isn't going to come out with some brand new QE3 plan tomorrow. He's not, and they're not going to necessarily announce it at a scheduled time. I think it will come out of the blue, and I think that's one of the reasons why being short this market is a dangerous proposition, and you have to be cautious there, although there are a couple names I've seen getting busted apart, like Baidu's been pretty weak lately. But that possibility of them coming in overnight and announcing something is adding to the danger on the short side. So it's easier to be long here than short, and using market weakness to accumulate names that have shown strength previously and are pulling back constructively. I think that's the best way to operate in this market. If we take a look at the S&P, same thing here. There's more stuff stocks, and I think with the QE thing off today, I think we're seeing the AGQ silver down, not even 1%. So silver and gold coming in just a hair. Silver, that's LV down about 1% here. I think the GLD is about down similarly. So in the short term, people are selling into the big rise in these metals. And that's a pretty sharp move. There's silver right there, and we bought silver in here on the AGQ, and it looked like somewhere in here on this move off the 10-day moving average, and it's run up very sharply in just a few days. So it's pulling down, pulling underneath the 200-day moving average. I don't know if I'd necessarily use that as a selling guide per se. Although if you have good profits, you want to protect them, but you could come back and fill the gap here on the SLV. That would take you right to the 10-day line. So I think, given the thrust of this move, you might be using the 10-day or even a 50% retracement of this whole move as kind of your ultimate downside guide. Now, depending on your own temperament, you might blow out of it sooner, bag profits, and then look for a new buy point if you wanted to do it that way. So there's more than one way to skin a cat when it comes to the precious metals. But I think that's basically what you have going on. You have some selling in anticipation of Fed Chief Bernanke not really saying too much tomorrow. If he does, then that's going to be an upside surprise, I think, and the market will take off. But I don't think the market's really expecting too much here, and it's kind of trading that way today. You have an excuse for people to take profits. And again, you have to remember, where's the market been? And even the S&P, the boring, slow S&P, has had a nice move here. You can see in August so far. The Nasdaq's been the stronger of the two. And that's pretty much where we focus. We've liked the TQQQ as well as the Tech L, I think it is, which used to be the old TNA. We're doing the same thing as the Nasdaq.
TYH.
Move. TYH, yeah. I'm sorry, the TNA is the long Russell. Sorry. And pulling back to the 20-day. But it could even pull back a little further within the context of this move, and things could still be normal. So it does get back to a situation of watching what your stocks do. So if we look at some of the stocks, we see Coors. Coors is pretty far up there. Hopefully you were buying into this pullback here. You had a shot either on the Bible gap up day or a couple days later on a pullback to the 48 level. That's where we entered the stock. This is actually our biggest position, along with Regeneron currently, and that's acting pretty well too. But this is up there, and I could see it pulling back to test the 10-day moving average. You had some positive news that somebody was doing channel checks on Coors stores, and that was all positive. That sent the stock up $1. I was actually heavy in the stock this morning, and I sold part of my position, not quite half it, but it's a real heavy position, a couple 100%, and I'll sell half it into that 1 point plus rise because it is about 2%, 2-3%. And I think it makes sense in this kind of market because it's a news pop and the stock's kind of up there. I'd like to see confirmation off the 10-day moving average of some sort of pocket pivot. So my thinking is here that you need to have the 10-day catch up because it's gotten pretty steep. It's stair-stepping higher. So what it tells you is that even as the market has been weak over the last, 1, 2, 3, let's just say moving sideways over the last 8, 9, 10 days, yeah, the stock's actually trying to go higher. So it really wants to go higher. So you do have to keep your core position, and for me, a core position can be anywhere between 50 to 100%, and that's plenty if I have a nice cost basis of 48. But I do take advantage of these little swings to the upside up here to sell a little into it, and it depends on the size of your position. If you're uber aggressive the way I am, you definitely want to keep profits and not get too top heavy. So that's one way I avoid that, is like selling a little bits into the rise. If it keeps going higher, then I can always turn around and buy it back. But better to have and keep that profit cushion underneath you. Some other stocks, Amazon yesterday made an all-time high. The old high was 246.71, and yesterday it closed above 247. Not a lot of volume on the move, but you'll notice it is moving higher along the 10-day moving average, and it's been doing so since late July. So that really means it only has 4 or 5 weeks where it has followed the 10-day moving average. It really hasn't violated. There's a little move here, but in the context of Amazon, that's kind of normal. It tends to be slower. Apple tends to move faster between the two of these, what I would call big stock leaders. And right now you really have 3. Notice Apple finally pulling into the 10-day moving average after streaking straight up off of the lows around the 570 level. That's a pretty sharp move, so I wouldn't be surprised to see it move sideways for a bit. But the fact that it can hold the 10-day moving average pretty well today on the market, with the market coming down. It's not really getting hit too hard. Is probably constructive. So I don't think you want to go around shorting Apple. Although I know some people are trying to short the breakout here, and I wasn't quite sure why they would want to do that. You need to see it break down before you want to come after it. And you even notice that when Apple does break down, it doesn't really want to come down. And I'm thinking with the Samsung decision, or the decision against Samsung, that Apple probably has potential to really expand their sales of iPhones and iPads and whatnot. So, but we'll see how that progresses. Still not completely out of the woods. But those have acted well. Google also, which is seen as being in trouble, sold off on the news this Friday, I guess, and then Monday, when it opened up, it sold off. But it found support and bounced right back up. And you might even say this yesterday was a pocket pivot, a continuation pocket pivot off of the 10-day moving average yesterday. So Google fans, there's an addable buy signal, I guess, if you like it. But keep in mind one thing. You have had a very sharp run, so I think this makes it a little riskier to be buying a continuation pocket up this high, but it could continue moving higher on just simply on the basis of the fact that on a weekly chart, this is a weekly chart here, Google has only recently emerged out of this long basing formation, which lasts not quite 3 years, and only recently broke out. So within that context, this may be less risky to buy, but do keep in mind that it doesn't have to go anywhere. It may just go sideways for a period of time, given this position here. So another stock that we were looking at as a pocket pivot, I think on last Friday, which looked good. You had big volume CRM, but that Salesforce came up off these lows around 120. So that's a very steep move, and it doesn't seem to be following through. The way I would handle this myself is, I'm buying this pocket pivot with the idea that this thing's going to go higher, and when it starts to flounder in here, I just got rid of it, and it dropped below the 10-day moving average. So, but I'm running a very aggressive position there. Somebody who's only buying, say, a 5 or 10% position in CRM on this pocket pivot, they might be able to afford this to sit with it and just see how it develops. It may need to go sideways for a period of time. You do have some overhead from this side of the pattern, but I'd have to say that overall it's kind of an ugly formation. The weekly pattern doesn't show a lot of big upside. There's a big upside week here. But it's almost like a retracement of the prior week. So, it probably needs to do more work. So I'm not that thrilled with it. One of the stocks that's actually acting very well today, or at least it was last time I checked, and it's still up, is Regeneron Pharmaceuticals. Had a nice pullback this morning right on top of the base of the 10-day moving average. And this is what I'm talking about when I say you have to watch your stocks. That's a normal pullback right to the top of the base, so it's not a reason to be running for cover. And it finds support, and now it's trading up on the day in a weak tape. So that's constructive. You got to love the base here. Nice tight cup with handle, stock breaking out and holding above the 10-day moving average. So that looks fine. So there's nothing really wrong there. RACS is another one we've talked about. You had a pocket pivot here on something that's kind of like a handle breakout. If you call this a cup, excuse me, and it clears this, and you draw a trend line across these tops here, and it's a breakout. But what it's done now is running up straight up the right side of this big cup formation. It's a pretty deep cup formation. It's about 33% deep or so. And it probably needs to go sideways here. So you had a nice move from the pocket pivot. It's probably going to have to go sideways, but it's going to go higher because, again, very sharp move to the upside off the lows. And you can notice this looks a lot like the NASDAQ index as well. LinkedIn yesterday had a pocket pivot on a little range breakout. So, it is extended from the 10-day and the 50-day. But I don't think LinkedIn is a stock, having dealt with this stock for a while, and we own it, and I own it closer to like 102 underneath the 50-day actually, because I think you have to look at this stock a little bit differently. We already know that LinkedIn, it's not a stock you buy on strength, and if you're going to be a momentum monkey, buying it every time it looks strong, I think you're just set up to possibly have to sit through a pullback, and I think you're seeing that today. You have some overhead on this breakout here, so that's going to come into play. But I think what you do with LinkedIn is you use weakness to buy shares, and I noticed that the stock naturally seems to be very porous or never really holds the 50-day moving average. So the 50-day moving average for LinkedIn is pretty much useless as a reference point. I think in general you notice support around the 100 level, so my thinking was it should hold 100, so accumulating the stock down here. Now the stock's showing some strength, and hang out in here and see where it goes, because it may have to go sideways a little bit, but I think stock, if the market goes higher, stock is going higher. This stock is going higher. The weekly chart doesn't look half bad. You don't get a lot of selling 3 weeks ago on the weekly chart, and you pick up the next week, so you actually get some support off the 100 level, and now you're back above the 10-week line. I think this is kind of a strange-looking cup with handle, and you have this big volume support off the 200-day moving average, and then you don't really get any big selling on the weekly chart. So it's holding up okay, and it's continuing to build its base, so I think this looks fine. And really, if you look at LinkedIn, it's the last man standing among the social networking stocks. So I think it acts fine, and I don't really have any problems with it. But I do think you have to be a little smarter than being just a momentum monkey, and you have to buy the stock on weakness rather than jumping on it on strength, because you can easily find yourself down in a hurry. So, and that's just the nature of this market, I think, right now. Mellanox Technologies had some pocket pivots here. It's coming down below the 10-day right now. It's still holding above the pocket pivot. So, right now it looks okay, but it's coming in with the market. Maybe it's going to continue to hold the 10-day, and by the end of the day it'll be showing some support and back above the 10-day. But one day below isn't the end of the world. But, that's a strong stock, and it's acting okay. It's starting to form this upside trend channel, and I think as long as it doesn't, blow apart here, and I think I'd use maybe the 110 level if I'm running a position here, buying on the pocket pivot. I'd want to see it hold that 110 level, maybe a little lower on a pullback. So this is still acting okay, and I think fundamentally its stock has a lot of potential. So let's see, what else we're looking at. I keep an eye on SolarWinds in here. It's a little bit funky. It's just going sideways. Had a big gap up here. The stock has acted okay. It's just in a flag pattern. But watch for a pocket pivot coming up through the 10-day moving average. That's something to keep an eye on. Some other stocks, D.R. Horton, among the builders, they've been doing okay, but they're just all hanging out now, so there's really not too much. You notice they're pulling back. Toll Brothers, Pulte is acting well, so I think Pulte's the leader. But all these stocks are teenagers for the most part. D.R. Horton is trying to get of legal age here, and just barely clearing it right now. But it's still, to me, the home builders, a little this, a little that. I'd probably rather be playing some of these. I would be wary, though, of pocket pivots like this. This is a pocket pivot. You're coming in a downtrend, and then you zoom back to the upside above the 10-day moving average. I actually was buying the stock as it was pulling into around the 25 level, a little lower in here. And I'll trade out of this on this move because it's a V-shaped move. But this is a sign of strength, so you might see it go sideways in here and try to go higher. The only problem, I think, with NSM is it has had a long run already, so I see this pattern here on the weekly chart, 2 weeks down, 2 weeks to new highs. Now it's trying to hang out in here, but it's not really very tight. It's a little bit loosey-goosey. So I think this thing probably needs to build a base. So other ways to play it have been things like lumber liquidators. Been watching for a pocket pivot here. I'm not sure. Did we get one yesterday on this Dr. K off the 10-day? I think it just missed.
Let's see. Looks to me like it was 547, 700.
Missed.
Just missed it. No,
Yeah.
hold on a second. I'm showing. Yeah, it just missed. Yeah.
Yeah, just by the. Oh, wait a minute. Yesterday's volume I'm showing 554, 600, and the day that it should have exceeded was.
Oh, 547, 700. Yeah, so it did beat, just barely. So that qualifies as a pocket pivot.
572. No, I'm wrong. Forget it. No, it has to be. Wait a minute. 1, 2, 3.
Yeah,
4.
it's fine to qualify.
Yeah, no, that's right. It has to be the day of 8/22, August 22nd. Yeah, so it does qualify as a little pocket pivot off the 10-day moving average. Would have been better to buy in the. I think we talked about this thing pocketing right in here, coming out of the flag, and I think it was this day right here that just barely made it. So this is acting okay, and this is pretty strong stock. That's what it looks like on the weekly chart. So it is way up there. Even Home Depot, we notice, has been acting pretty well. I think among the biotech, Regeneron is our favorite, and you've seen Alexion try to come up off the 10-day or the 50-day moving average. We talked about this last week, possibly the week before when it was pulling back, and it has moved up and off of there. So it's building a base in here. This PCRX has been going nuts and moving up steadily after a couple of pocket pivots in here. But it's a thinner stock, so it is squirrely, and that's something you have to account for if you do buy a stock like this. Onyx Pharmaceuticals has had a pullback to the 50-day moving average. It's trying to build a base in here. Probably 2 gaps in a row. It was not likely that this was going to go higher, particularly since it doesn't make any money. But some of these that don't make any money have acted pretty well. Affymax has done okay, and it's trying to hold this breakout. It had a breakout here. It stalled out, came in a little bit. Now it's trying to get back above. There's no real volume. But I think on weakness down in 17, it's possibly viable. Seattle Genetics is another one that is acting okay. Moved kind of V-shaped though, and we talked about this last week, so that's problematic. But the fact that it's going sideways looks okay. So it's building this little short little cup with handle. Maybe it works, maybe it doesn't. Who knows? But it is one to keep an eye on. So, but our favorite by far is Regeneron Pharmaceuticals, and I think today being up in a weak tape sort of attests to that strength. Biogen looks like it's okay and may want to come off the 50-day moving average here. See, this is a stock I think that I might test buying some shares here on this pullback and looking to hold as long as it holds above the lows of the base or say the 50-day moving average, which is tended to hold on the way up. So that's kind of how I look at this one myself. Amgen is another one that was acting well. It's sort of coming apart today, but the volume isn't really very heavy. There was some news that Teva's got a drug that's going to cannibalize some of the Amgen sales. I think the two companies are in partnership. But in any case, that is basically the drill with the biotech. So what I might want to do now is go through some questions and see what everybody's thinking here. Let's kind of scroll back up. WPI, people are asking about that. Stock had a Bible gap up, pulls back, and it's holding above the Bible gap up low, which is 80.60. So, if you're going to buy on the Bible gap up, this would be the pullback possibly to buy on this. Dr. K, any thoughts on that one?
I like the action. It qualifies as a Bible gap up after a constructive price volume action leading to that. So this is a gentle pullback. It looks fine to me. It looks like it's doing what it should, and the fundamentals are intact as well.
Yeah, that's my take too. You have to excuse me. I'm eating a little snack here and some tea. I think all traders should have green tea or spearmint tea, as I like to drink, and homemade gluten-free chocolate chip cookies are pretty good actually. And that's magic trader food. If you eat those, I guarantee you will never lose money in the markets. Anyways, add to the cues here, Dr. K. If you're running according to the models, let's say you took a partial position on the last buy signal and you're looking to add, would you be buying some in here? And if you did, on what basis and using what stops?
Yeah, it depends on your style. I mean, some people like to buy on weakness. It suits that type of trading psychology. And if that's their style, they could perhaps take a little nibble here. Others like to buy on strength. So in other words, you could pyramid your position as your price points are hit on whatever ETF you're using. That way, it's kind of almost an insurance, so that if you're buying as the ETF goes higher, your average cost should be below where the ETF is trading, and therefore, if the market does go into some sort of nasty correction, you can get out potentially at a profit, depending on how many times you bought on the way up. Of course, the downside to pyramiding is that you're not initiating your big position at the very beginning of the move. You're averaging it out really across the uptrend. But that is it's a form of insurance that I think bodes well, especially in non-trending environments where your initial position should be on the small side, because there's a higher chance that it will not work.
Yeah, and one way to approach this also is you can just use some simple reference points. If you bought somewhere in here and you wanted to add on this pullback, you could use a 20-day moving average or the lows here, thinking that if you do buy, this thing should hold up and show some strength going into the close, or at least tomorrow. So if you add it, and you can always blow it out, whatever you added up here, you can always blow it out if it doesn't work, so that you don't get too top-heavy. So that's just one way to deal with it. Everybody wants to know, not everybody, but a couple of questions on, would you short MNST and what was the other one here? And Buffalo Wild Wings. I wouldn't short Buffalo Wild Wings because it is too thin, and I believe it trades less than 1 million shares. I like to see stocks trade a couple million shares, but if you can get away with shorting 2, 3, 4, 500 shares in your account. Not a big position with a stock that trades about 600 and I think 80,000 a day on Buffalo Wild Wings. That's a possibility. MNST Monster. Here's you got something of a head and shoulders. I think this is the right side of your head. So you got a left shoulder, head, right shoulder. You break down, you rally to the 50-day, you're breaking again, and you're coming down through the 200-day moving average. I suppose you could short it here, but your stop probably is going to have to be the 200-day moving average at 60.37. So that's doable. So if you really want to go short. I know it's starting to look better as we were on. You can see the market coming in. The put-call ratios, both the stock put-call ratio is 1.02 and the index put-call ratio is 1.06. So we can see that there is a little bit of fear starting to build up in the market here. Not too much, though. And like you said, you could come down a little bit more. It just gets down to watching your stocks and operating on that basis. So interesting. I'm seeing cores starting to peel off now. So look at that move. So that's starting to come off and down to the 10-day moving average. Interesting. Buffalo Wild Wings, let's see. Right at the 200-day moving average, you got the 50-day moving average coming down. So, it looks like it's a shortable position. You've got some overhead resistance up in here, so that's a possibility. So, if you want to do it, but like I said, you're going to do 3, 4, 500 shares. That's probably the best thing to be doing here. Let's see. Somebody asked, yeah, it was my birthday yesterday, but it's over now, so I don't really want to get into it. Does it make any sense to buy the long AGQ and short ZSL going into Ben's announcement? Dr. K? Does it make any sense to buy both the long AGQ and the short ZSL? Those are silver ETFs going into Ben's announcement Friday. Then watch the reaction and sell the one it goes against. Why not just go to cash and then buy the one that starts moving on the basis of the speech? So that seems more sensible to me rather than trying to
I'd agree.
do something where you're trying to play two ETFs. Why not just go to cash and then go long the one that works? But right now the way it's acting, silver could pull back a little bit more. So basically that's the situation there.
Not only that, there's degradation, in these leveraged ETFs, wherein if you're not getting a trend, you could hold two ETFs and lose money in both in a non-trending environment. So it could work against you in that sense as well. Of course, leveraged ETFs have the upside of if you're in a trending environment, they tend to outperform. So they're double-edged swords.
Yeah. Let's see. Is GNC a pocket pivot today? No. There's no volume. It won't
get there. You probably won't get there.
Look like it, but even still, it's in a kind of coming up through the 50-day. It's come up off the lows, a little bit V-shaped, come on that position. So I don't know if I really care much for that.
Yeah, it had a gap down on some volume just a couple weeks ago, so it's not the best pattern.
Where would you put a stop on REGN? Again, I would point out that stops are really a function of your own risk tolerance. If you're running a very aggressive position like I would be, 140 is kind of what I want to see it hold. So for me, outside of a core position or even a smaller position, because we were buying this down in here on the pullbacks and then got bigger on this day on the pocket pivot that presaged the breakout the next day. And so it really depends on where you own it. We can afford to give it a little more room because we own it closer to the 136, 137 level. And so if you just bought the breakout, you definitely want to see the breakout hold. But, you're seeing the market, it starts to sell off, and it's not, I think the volume's still low, and you're getting everybody scared. And I think the fact with Regeneron that it's able to hold up in the midst of this is probably very constructive. So. Alexion, I think I just talked about that one. It found support at the 50-day moving average, and now it's just pulling back. So there's really nothing special going on there. Is RAX forming a pod? You only know if something is forming a pod if it starts to break down. So if you start to see RAX blow apart, and usually what I use is a breakdown through the 20-day moving average. That usually seems to seal the deal on something like this, where you do have a steep straight down, straight up, and that's a possibility. It could turn into a punch bowl of death and basically break down. That's a possibility, but it doesn't mean that it has to happen. So, but you won't know until it starts to break out. Seagate Technology, would you agree the pullback looks healthy? Oh, I don't know. It doesn't look all that healthy to me, given that it's gapping down, but it's pulling right back to the top of this cup. But, you know, I don't know. I don't know if it's necessarily healthy. How would you look at this, Dr. K?
Yeah, I don't like the mini gap, and you know, it's got a prior gap up to its credit, and it's right at on top of the base. So give it maybe a little bit more room to see if it gets some sort of support here. But I wouldn't be buying this thing here. No.
I'm also not really that thrilled with hard disk companies. I know it sucks run up, but it's kind of an old business with SSD coming into play now. So, I don't know. I'm not a big fan of this, and I wouldn't have bought it in the first place. So, is the pullback normal? I don't know. I'm not even really thinking about Seagate because it's not even a stock I would buy. So, on that basis, I would say go with Dr. K's assessment. So the gap down is not really that constructive. But to me, not the best stock to buy. Expedia, I remember shorting Expedia up in here, and I should have probably stayed shorted. But you know, you had a viable gap up here. It's not holding, so you'd sell on that basis. And with other stocks in this area like TripAdvisor, to me this is looking like it may be shortable again. So I'd be keeping an eye on that. You know, if we go into a more bearish market, but it looks pretty weak. And Priceline is the other one. It's also been looking pretty weak. And all it's doing is rallying up into its 200-day moving average and almost looks shortable here if you're inclined to do that. So that's something to keep an eye on, I think. And but you know, the whole group is weak, so I would expect Expedia to be weak as well. And it could turn out that its move is over with, and if failing on this viable gap up, it's not a stock I want to buy. Here, Dr. Here's one for you. Hedge funds use ETFs to hedge positions. With the proliferation of ETFs and the ease of shorting, maybe high short interest doesn't have as much meaning as it used to. It may not. You know, who knows? But again, you know, those are secondary indicators, so you don't just start throwing all your money into the market and go 400% long because you see a high short interest. This is one clue telling you that somebody out there somehow is bearish. I mean, somebody can also argue that lower volume levels lead to a higher ratio of shorting, but that assumes that shorting always remains constant and doesn't fluctuate with the volume levels themselves. So I don't really agree with that premise that because we have lower volume levels overall in the market, shorting becomes a higher percentage. You're assuming that shorting then becomes constant relative to overall volume, and I don't think that really holds water. So I do think it tells you that there is a high short interest in the market, but it could be a function of a lot of different factors. You don't know for sure, and again, it becomes a secondary and sometimes even a tertiary or third level indicator. So that's my take. Tiffany is short. I'm not looking to short Tiffany. You got a big viable gap up. It would need to break down more severely from here, but so far you have this big gap up and it's holding, so not something I'd be looking to short. 5? What's 5? Is this what is 5? 5 below? Really thin stock. It's just an IPO. It's just trying to build a flag, so I don't really know anything about this. It doesn't hit my radar screen, and I'm guessing it probably doesn't have any earnings. Now, negative 200% earnings growth in the most recent quarter. Lost 2 cents. Next quarter they're going to make a penny. I don't know. This one doesn't really thrill me. 51% sales growth, and they can't get any earnings out of that. And it's a retail discount and variety store. I don't know. It doesn't really thrill me. I think it's likely to end up like the fresh market, which is looking a little bit not so fresh these days. But this pattern is probably suspect from the start. Was there a viable gap up in here before? Yeah, here it was here.
Yeah.
And that it just never really went anywhere. Then it breaks out, so that if you sold it here, it's just enough to tick you off. Things like to do that. And then you get a viable gap up yesterday, and it just reverses. But it's kind of a really thin stock relative. Well, it trades 1 million shares a day, I guess, so it's not that thin. but just kind of an erratic stock and not a lot of tightness in the pattern. But that's kind of been its nature. So this big volume reversal, I don't think you want to be touching the stock with a 10-foot pole. So
It's a tough one because he had two gap ups, one on earnings and then one again on good news recently, and so it's erratic. That's what it has it going against it, but it has the two gap ups, and then yesterday's gap up on a strong earnings report, but of course the conference call said otherwise and displeased investors. So yeah, I mean, as we wrote in a follow up to this one, as it started to retrace and reverse course. It's our view that some people could certainly sell at least half the position if it closes the gap and moves below yesterday's close, because that's not a good sign. You don't really want to see that in a viable gap up. Viable gap ups generally don't close the gap. They usually stay up and then they move higher from there, hopefully. If they're in a leading stock and the market's good, they generally will move higher from that point, and they will never close the gap. And the other thing is that yesterday's market was not particularly weak, and yet TFM did reverse and close the gap. So that was the warning sign. I mean, even without knowing that there was a conference call that was displeasing investors, you just knew there was bad technical action going on in the stock. So that was the warning to sell at least half your position.
give me a second here. Just got to deal with something. Okay, where were we? Let's see. Pan W. What is Pan W? I'm always wary when somebody mentions a stock that hasn't hit my radar screen. It's either way too thin or has negative earnings growth or something nasty. But really thin. Palo Alto Networks. Now I know those guys. I don't really see anything here. There's no buy signals. You'd look for some kind of a breakout or a pocket pivot. Right now, the stock's just sitting in a it's a nice tight little 2-week flag type pattern, and so it's setting up okay. You can see it in here. It doesn't look that great, but that's what the pattern looks like. So you're just waiting for a buy signal. So and I think you would have to exceed this volume day here, which would be 269,987 shares. It's almost nothing. It's kind of a thin stock, but interesting little pattern. So I think probably one to just keep your eye on. Pandora had a viable gap up at it's coming in from a low point position in its pattern. So let's see if I can make this bigger. So I don't really see that as viable. Do you, Dr. K?
Yeah, no, it's always like what I've said before. Don't bottom fish if you're in a market that hasn't just recovered from a nasty bear situation. I would not be bottom fishing because there's better stocks out there, just in general.
Yeah, and the other thing is just sort of bottom fishing, pocket pivot. They work better, or it works better with big leading stocks, big stocks. Okay, because when that turn happens like that, and you've seen in the past with stocks like Intuitive Surgical, with Priceline, I think last year, the year before. You've seen it with Google. Those are institutional stocks, and when the institutions start buying and pushing that thing up through the 200-day, and you get some sort of bottom fishing pocket pivot, a lot of times that has more wherewithal to sustain itself. Whereas these thinner, little dinky things, not so much. So they don't tend to work as well. And I think some people have asked us recently about bottom fishing pocket pivots in Envision, or InventSense rather. And yeah, there it is, but really not going anywhere. And it's not really a big institutional stock. It's way deep in its pattern. I think another one people have asked us about is Fusion IO. Here's a nice viable gap up, I guess, and it's holding up, but no real earnings growth here. It's really deep in its pattern still. And it's just like a big, ugly double bottom, so you need to see some kind of breakout from here. So this doesn't really throw me. I don't even think the fundamentals are that good, are they, Dr. K? No.
No,
they're
it's
going down.
an interesting story. That's what it's got going for it. But until the technicals shape up, it doesn't matter how good the story is.
Yeah. So yeah, so I'm not really interested in that either. These aren't really big stocks. So Pandora kind of falls in that. Interestingly, Pandora gaps up, and yesterday in the office I put on Pandora, the radio. It's an online radio station, and so I could listen to some music while I was in the office yesterday, and they happened to gap up, and it's in the news. And I haven't looked at Pandora as far as using the service in like 2 years or something like that. let's see, SPLK chart and today's Q report. Splunk, we're not really into it. So we talked about this last week, and we have really no interest in the stock. No earnings. It's still forming a base on the weekly chart, and still got a lot of work to do as far as we're concerned. GDD, any comments? Well, we haven't really liked the stock. It's a little bit erratic and chops up and down, so I don't really have any comments to offer other than that. The pullback today, you go straight down, straight up to new highs, so it's not surprising that you see a pullback today. And on that basis, the stock pulls back to the 10-day moving average. It's way up there. There's no real buy points. I guess you could say, have we had any pocket pivots, proper ones? Not really. Not since like here. And even that one, you buy that one, and you might have gotten shaken out 2 days later. So it tends to be an erratic stock. I know SSYS, probably the more institutional of the two names, although I have noticed institutions and mutual funds have been buying both of them. And this one's extended from a breakout. But those two stocks are in the same space. Triple D, I don't really have any comments outside of it's holding the 10-day moving average. So I hope people aren't, when they ask us to comment on stocks where to me the action seems pretty obvious, that it's pulling back after going straight down, straight up, pulls back to the 10-day. If you're expecting us to tell you that, oh, you better sell this right here, because we don't have any idea. It could continue coming lower, but it tends to be an erratic stock, so you kind of have to look at it that way. And there's really, in that sense, there's really not too much wrong with the stock. It's trading a little bit heavier volume this morning, but not too much wrong with the stock given the way it tends to act anyways. So EW, Edwards Life Sciences, had a pocket pivot the other day here, so coming back up above the 50-day moving average. This one actually closed below the 50-day, I believe, and just a few cents, but it's off the 10-day moving average, the magenta line, and it's holding so far. So it acts okay. It's up in a week tape like today, so you're basically in a 1, 2, 3, 4, 5 week base. Made a new high here, pulled back in. Probably not quite ready coming out of this flag given the move up, so it needs a little more time. It's acting okay. Probably viable here with the idea that it should hold at least the lows of the pocket pivot day if you want to run a tight stop, or you can use this low, whatever your temperament is, but probably not a maximum of 6 to 7% on the downside as a stop. But it's acting okay. And there are some names today acting okay, and I think that's constructive for the market. So I bought back some Coors a little while ago at around 53. It looks okay. Now it's starting to move. So everybody jump in there and push it up for me. But you see it fall. It hits a 10-day. So we were just talking about that, and then it almost seemed like a couple of minutes after I said that, I watched it being right in there. But I haven't alerted 53, and I would add to shares there. Like I said, I sold a big position earlier on the move up, so I'm in a good position to do that. And I try to keep myself in that position all the time. Running big positions or trying to accumulate larger positions in the pullbacks or at precise buy points. So with Coors, for example, getting the position that we have in the account that Dr. K and I run together, we were very aggressive right here, and we're still basically holding that same exact position, but it's a pretty good sized position. I think it's like 40%, so that's a decent position, and it's holding up, and we haven't done anything with it yet. And in that particular account, what we'll probably be doing is using a bona fide buy point off the 10-day if that occurs to add to that position. So, but we did actually have I think we did buy some on this breakout, but we sold into these little moves, just taking some profits. Because in this market, every time that we've gotten aggressive, if we don't take some profits when it runs up 10, 15% for us, we end up getting in a position where we're a little bit too top heavy, and so we've been trying to avoid that, and that's one of the reasons why we trimmed it. And why I was telling you guys earlier I was trimming my position. That turned out to be a smart thing this morning, and now it puts me in the position of having my cash in my pocket. I still have the core position, but now I can come back and take advantage of this pullback to add to my position if I want to. So if it doesn't hold the lows of the day, say, then I just blow it out and go back to my core position. So see, investing is really easy. Just try not to think about it too much sometimes. Hain Celestial holding the Bible gap up, so nice pullback, looks okay. But if you're buying it, you're using the 65 low, plus maybe 2 or 3% as your stop, so maybe that even takes you down to 63.85 where the 10-day moving average is if it pulls back. So, but not a name that really thrills me, I have to admit. Dr. K, do you get excited by Hain Celestial?
Haven't yet.
Doesn't cause any palpitations or anything like that? Decent earnings growth.
Good gap up. I mean, good earnings support and all of that. But it's if someone were to buy this, that's not a bad buy. There's nothing wrong with buying it on that gap up day. The earnings are decent enough, and the institutional sponsorship has actually increased every quarter going back several quarters. So, it has a lot of good things going for it. I would actually potentially get more excited in this if it has some sort of maybe pocket pivot, or it gets tight in here and then comes out of this little consolidation. And yeah, overall, it's not a bad stock.
Yeah, I mean, so that's okay. So what would you do if you wanted to buy it now? I prefer to be buying it on a pullback towards the low here. Otherwise, you're a good 5% plus above, well, about 5%, say, above this level. So you'd have to account for that by possibly not taking as big a position because it is extended up there a little bit.
Right. I would wait for a retracement of some sort, and your exit point, which is going to be 1 to 2% under the gap up low.
Yeah.
So whatever, it's just put that into your calculations for the risk that you're going to put on the trade, and maybe you just take a tiny little position if it's a little bit above beyond your risk levels.
Yeah, I agree. Molycorp bottom fishing. We don't bottom fish, so I wouldn't touch this with a 10-foot pole. This thing's about as ugly as they get. But if you think you know something and you're a value buyer, then that's for you to decide. But in terms of us looking for strong stocks, definitely does not. Dr. K, do you have to cough on me all the time? This
That's a cyber cough. Disease-free, not contagious.
Okay. But what was I saying? I lost my train of thought. Oh, yeah. I mean, this thing's in a downtrend, and I don't see the downtrend ending. So, buy stocks in uptrends. Go trade in the direction of the trend. That's my advice on this one. So that means blow it off. Zillow, I like the way Zillow acted around the 50-day. Zillow reminded me almost exactly of LinkedIn. So if you just kind of keep this section of the pattern in your head, and I'll switch to LinkedIn here, and you can see there's a little similarity in these patterns, and so Zillow is moving up along with LinkedIn. I don't know if they're related per se, but there's no pocket pivot in here yet. But the stock, if you look at the stock, it's just building a cup with a handle here on the weekly chart, and maybe it's going to try and come out of here. If the turnaround in housing is real, this is probably a good way to try and play it. Like I said, I've liked LL as a play on improved housing sector, and that includes home sales and all that. NSM has been a good play, and it's possible that this one works as well. So Zeeb, given that it's online real estate, I think they also deal with rentals as well, and I know the rental market has been doing very well. About 3 or 4 years ago, I had some friends who started a fund that was just investing in apartments, and so they bought up a bunch of apartments back then, and they've done very, very well because the whole world has been kicked out of their house after defaulting on their mortgage. Unless you're really poor and really irresponsible, then Obama will take care of you, but anybody who's trying to be reasonably responsible has been booted out of their house, and they're trying to rent, so people moving to rentals, and that's been a big place, and so Zillow has some exposure there. That's probably a good thing, but it's acting okay. But I don't really see any buy points in the stock per se. Again, this one, if you understand the story, and I know Ross Haber has liked the story here, and he'll tend to buy on weakness. And as long as it doesn't break down, you're okay doing that. And these become obvious points under the 50-day. It violates 50-day, but each time it turns around and goes up. Just kind of the nature of this silly market and the way it has acted. So, but it's okay. Z is okay, but nothing that we can really move on right now. Fortinet, good old Fortinet. The leader in, I used to have that sales pitch down pretty well, but I forget what it was. But the leader in security for networks, and just coming up the right side of a cup. Nothing really thrilling there. So I don't know if you own it. It's not something I would have bought myself. What would the fail-safe on the market direction model be, Dr. K?
Well, right now it's still, let's see. I have to go to the spreadsheet, but it's basically 1.5% under where the model entered the market on the Nasdaq Composite. So whatever that level is, I should have that on my spreadsheet. So 1 second, if you want to know the exact value, so we entered at 32.98 times 0.985, so that would be 29.87. That's the fail-safe at present. Now, it's not a static fail-safe, of course, as I've said. It can move around. It's if anything, it's going to get tighter than looser, because generally 1.5% seems to be, in general, a maximum fail-safe with the revised risk workup that I've done.
Right. So it's basically the top of this area right here that the Nasdaq broke out of in early August.
Yeah.
Yeah, right around there. So undercutting this level here. So how do you two find leading stocks? Let's see. You can just open up IBD and you can look at the IBD 85 index or the IBD 50. All of those are great lists. You can go to High Growth Stock Investor, or HGS Investor as they call themselves now, and they have the HGS Investor 150 or something, or 100 or something like that. But they all, it's also an index of leading stocks, and those are ways to find pools of leading stocks, and then you break it down from there. We run some screens, but I find that you don't really need to do too much outside of having a list of every stock with an IBD composite rating over 85. If you want to really tighten up, use 90, and just keep to that pool of stocks. And I also make sure that they trade a fair amount of volume. I like liquid stocks. I'll accept thinner stocks if they're earlier or emerging situations, so that's how I do it. But I really don't think you need to go beyond some of the basic lists that are available on investors.com or available through HGS Investor Software or any other service that provides you with lists of leaders. If you're just looking at our website, virtuousselfishinvesting.com, you look at the stocks that we're putting out reports on over the last month, and that's a pretty good list of leaders just to operate off of. So it's really not rocket science. In a good market, finding stocks to buy is not the difficult part of the problem. The difficult part of the whole problem, the whole process, is once you buy them, how do you handle them? So, Bill O'Neill always used to tell us, who cares? Any idiot can find a stock to buy that goes up. The question is, and the way that you really make the big money is, how do you handle that position? So that's really what you need to focus on more. And I think saving yourself a lot of time by using some of these preset lists is a smart thing to do, because the leaders are always there. They're there. You could turn the pages of IBD and you see Coors, you see Apple, you see any number of stocks, Mellanox. They're in there. So that's an easy way to find stocks. Francesca Holdings. It's a thinner stock and it's acting pretty well. So breakout here, hasn't really had a pullback. The only way I'd buy it now is either some sort of continuation pocket pivot off the 10-day here, which hasn't occurred, or a pullback down to, say, 33, 34 would probably be very viable. But it's a thinner little stock, although I do have to take that back. It's trading $1.5 million these days, so that's not too bad. But I tend to prefer something like a Coors. It's a much thicker stock and much easier to trade on that basis. So, wait a minute. You know what? I was right. FRAN. I was using the wrong chart there. Yeah, it is very thin. It trades 312,000 a day. So I don't like that. Whereas Coors trades 2.9 million a day. So much thicker stock to deal with.
Well, the dollar average is about 18 million on Fran. So
yeah,
that makes it on the thinner side. Whereas the other one is about 3 million times. We're talking 50. Wow, let's wait. 3 million times 50. So that's about $150 million. That's a big difference.
Yeah. UA, nothing going on here. Stock's moved up and it's holding in a little flag pattern here. So there's nothing going on there. Just holding up. Cubis Pharmaceuticals, just the one you haven't liked, Dr. K. So let's see how it's doing. Oh, it's going higher. Dr. K, you failed on this one.
Yeah, this one has a in keeping with its pattern. It looks like it's doing what it should, but I'm not. This one doesn't really excite me in terms of.
No, we like Regeneron, so, but it's acting. It broke out and it's acting okay. So there's not much to say outside of that.
Yeah, it's got a great. It's second-ranked industry group. So and the earnings have certainly moved forward aggressively, and institutional sponsorship also has increased over a number of quarters. So it's got a lot of good things going for it, and that's the thing about these names is that while this one might not excite me right now, if it's all contextual to what this does going forward, I might start monitoring this one very closely to get into a position depending on what it does relative to the overall market in the days and weeks ahead.
Fortune Brand. This is another one like Lumber Liquidators, where it's a play on the whole home building products and that whole sector and the strength in that whole area. We mentioned the pocket pivot down here back in, I think it was August 14th here. There's a pocket pivot off the 10-day, and we mentioned that. You can go back and look at our reports. And then stock broke out, had another pocket pivot right here off the 10-day, which is right at the top of the base. So there's another place to buy. So you have 2 buy points here and here in the stock. Now it's extended from the 10-day moving average, and it's up on a day when the market's down, so it's acting fine. Nothing really to do there or really to think. Does GPS interest you guys at all? I'd have to say no because it hasn't shown up on my radar screens, but it's moving higher. So, if you like it, looks like you're going to get a pocket pivot off the 10-day. It's a continuation pocket pivot. So, but it doesn't really interest us necessarily, but it's acting well. But you can't kiss all the babies, so it looks okay. It's kind of like Ann probably is similar to this as well, and that's been very strong since the Bible gap up right here. So that looks looks very strong. So gaps the same way, but notice all the retailers are moving. So somebody mentioned finviz.com, FINVIZ, as a good website too for lists of stocks that are acting well. Speaking of dollar averages, what do you use as a minimum? Myself, I like to see 35.40 as a minimum, and it can vary from stock to stock. But a lot of times the thinner the stock, the smaller the position you should be taking. My new revised rule is that I don't ever really want to be long more than 2% of the average daily volume of any stock. So it used to be 10%, but I blew that off and adjusted that down to 2%. And so milk fat.
Markets used to be a lot more liquid and more liquid back then, and now 2% is probably a good rule of thumb if you want to be able to get in or get out without moving the price by any measurable amount. So and the other thing is as far as the overall market tone, it's just a better market. It's been a better market for more liquid names. We're not in a very favorable small cap environment. Now that'll change. I mean, at some point the small caps will start overtaking the big caps. But that still might be a year off, and we're not there right now. So until we start seeing increasing evidence of small caps making good moves, we're going to pretty much stick to more liquid names. And I generally would look at 25 million and up in terms of average daily dollar volume, 25 to 30 absolute minimum. If it's going to be on the thinner side, it better have a very compelling story.
Yeah. So anyways, that's all the questions that we have. So basically, just to review, what we're looking at here in the market is very simply, I'm not sure, how did this get there? There we go. We're looking at a pullback here. And how is volume doing right now, Dr. K? Are we picking up any volume, or is things still staying pretty...
It is still about the same. We're less trading, slightly less than yesterday, and yesterday was a light volume day. So there's not much excitement or action going on in today's market.
Yeah, and I think you use, again, using some weakness here. Coors is basically a hold. If you want to add, I think, on a pullback down into the 52, 53 range, that's possible. But remember, you got to keep tight stops on this. You don't want to let this get out of control and get top heavy. So, given the prior moves, and we're sitting on a pretty decent cushion ourselves, so we're not really in the mood to start upsetting our positions and starting to get freaked out about the market today. So we use the weakness either to add, or we're just sitting tight, knowing that we have a nice profit cushion in some names, and they're doing, things are looking okay so far. So that's really where we're at. We also keep an eye on the metals and see how they hold around here, either the 10-day moving averages, which are coming up. I notice gold. I actually should be using this chart here. Gold is holding the 200-day and the 10-day, so that's acting so far okay. I can't really say if there's anything wrong there. Silver tends to be a little more volatile, so that benefited on the upside, but this having been closer to the 200-day, it's pulling back towards the 10-day. That's what I would be looking for, filling the gap as your pullback. If these start to get out of control on the downside, then you're going to have to take action relatively quickly and back away or take some profits and not let them get out of control, because we saw that breakdown happen earlier up here, earlier in the year, back in February, if you recall. Silver blew apart, was looking very strong, and so things could come apart very quickly if that happens. So keep an eye on them. But if they do hold up and everything's fine, then I think their trends are intact, and you got to give them a little bit of room, because they were volatile on the upside. Nobody ever complains about that. But once they show just a little bit of volatility on the downside, suddenly that's a problem. But it really isn't. It's just what and how these things act, basically. So that's that's kind of how we would approach it. So other than that, we think that the market's just pulling back here, and it may take some more time going back and forth and going sideways. Just watch your stocks and operate on that basis. Okay, that's all I've got. Dr. K, anything else?
No, I think we're good.
All right, you guys. Take care. Thanks for showing up, and we'll catch you next time. Have a great, long Labor Day weekend, and we'll see how things shape up next week as we get into September, and allegedly when everybody comes back from vacation. So we'll catch you later. Take care.
So long, everyone.